Today, Ether falls to end a big week after the SEC opens the door to spot Ether ETFs. And Hany Rashwan, the CEO of 21 Shares, one of the potential issuers, explains when the products could be available for trading. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Ether fell this morning even after the SEC approved a rule change that will pave the way for ETFs that buy and hold the cryptocurrency. As of noon Eastern, Ether dropped more than 3%, trading just under $3,700. Bitcoin was pretty flat, trading around $68,300, and Solana slipped around 3% to $167. Despite today's losses, Ether still held on to its weekly gain of nearly 20% and is on pace for its best week in more than a year. 4 days ago, ETH surged on expectations the SEC would approve spot Ether ETFs, a sudden reversal from previous consensus. Okay, a couple other stories we're watching before we get to more on ETH ETFs. Yesterday afternoon, the House passed the CBDC Anti-Surveillance Act, preventing the Federal Reserve from issuing a central bank digital currency. The bill, sponsored by Majority Whip Tom Emmer, quote, halts unelected bureaucrats from issuing a CBDC, which would threaten Americans' rights to financial privacy without explicit authorization from Congress. During debates before yesterday's vote, Republicans expressed concerns that a CBDC could be used to control Americans' transactions, while Democrats said a ban would block public sector innovation. 213 Republicans and 3 Democrats voted for the bill, while 192 Democrats voted against it. Yesterday's vote count is a stark contrast to a vote the day before, when 71 Democrats joined 208 Republicans in voting yes for the Financial Innovation and Technology for the 21st Century Act, a crypto market structure bill. And a sad update from this morning, the Dogecoin mascot has passed away. Kabasu, the Shiba Inu that rose to fame as the face of both the meme Doge and the token Dogecoin, passed away peacefully in her sleep, according to an Instagram post from her owner. Another post on X early this morning from the Dogecoin account said that the impact this one dog has made across the world is immeasurable. As of noon Eastern, a sympathy rally pushed Dogecoin higher by more than 6%. All right, back to spot Ether ETFs, the big story of the day. The SEC approved a rule change yesterday evening that would pave the way for ETFs that buy and hold Ether. The decision comes about 4 months after the SEC approved spot Bitcoin ETFs, and the approval came on the day of the SEC's deadline to approve or deny the first application for a spot ETH ETF. Many of the companies that sponsor Bitcoin ETFs, including BlackRock, Bitwise, and Galaxy Digital, have also started the process of launching an Ether fund. Now, it's important to note that this is a first step. The applications that were approved, the 19B4s, allow exchanges to list different ETFs, but the funds themselves aren't yet guaranteed to begin trading until their S1 registration filings are declared effective. I spoke with Hany Rashwan, the co-founder and CEO of 21 Shares, one of the asset managers planning to launch an ETH ETF product, to find out what's next and when we can expect these ETFs to hit the market. Well, thank you so much for joining us. Big day, big week, and now that we can talk a little bit more about it to some extent, I would love to hear from you about what this week has been like, and how and when you knew that things were kind of starting to turn in your favor. Of course, aside from the approvals of the ETH ETFs themselves, a really big story this week was the stunning reversal, from DC and from the SEC. So how did this play out for you?
Thank you for having me. So at 21 Shares, we have, by being the world's largest issuer of crypto ETFs, a lot of experience working with regulators. And this is typically how it happens. Slowly, in silence, and then all at once. This is the culmination of many years of effort by our team, by our engagement with regulators. And it was always a matter of when, not if. And so we're quite excited to finally be talking about hopefully bringing very soon Ethereum into the hands of American customers, retail and institutional, in an affordable, regulated, safe, and professional ETF.
One thing I'm not really getting consensus on, as I've been reporting this throughout the week, is about the debate on the classification of ETH. So, of course, these approvals last night are just a step one, but fast forward a little bit, these funds are finally trading. Does this give us any clarity on whether we should be classifying ETH as a security versus a commodity? And to what extent does that matter, and to whom?
To the end user, what matters is being able to access crypto and being able to partake in this incredibly important part of our tech future. With respect to the question of whether ETH is a commodity or security, at 21 Shares, we have been consistently arguing that it is very clearly not a security. You can see the House bill with the proposed crypto bill right now highlighting what it takes for a crypto asset to be sufficiently decentralized. Ethereum matches a lot of that. We've taken staking out of the product along with a lot of the other issuers so that there is absolutely no yield and there's no confusion whatsoever. And lastly, Ethereum has been trading in terms of Ethereum futures on the CFTC, on the commodities and futures exchanges. And so this is something where I think the consensus opinion, at least in the industry, with very strong legal and regulatory arguments for a great many years now, has been that Ethereum is properly decentralized and is absolutely a commodity. And that allows us to list it as an ETF, both in the United States, hopefully soon, but also as we have listed Ethereum ETFs at 21 Shares in Europe and around the world.
What's next for these funds and for yours? Like I said earlier, these filings, the 19B4s, it's just a next step. And we're really not going to see these funds hit the market until your S1 registration filing is deemed effective. So what does the timeline look like for you on that? Is there a little bit of a scramble here, a little bit of a delay? What should we expect?
I think that's a great question. I would love to share more, but I can't talk too much about the timing in the US. There are a lot of variables at play. What I can tell you is it is a matter of when, not if. There is a lot of work that has already been done. I think a lot of the issuers, including 21 Shares, are absolutely ready. And we continue to be engaged with the regulators and committed to bringing this out and releasing it as quickly as we possibly can. But again, matter of when, not if, and that's already significantly better than where we were just a few weeks ago.
The green light for these ETH ETFs is really just one piece of a bigger story that we're seeing as far as crypto politics are concerned. Earlier this week, we saw the passing of FIT 21, a big step towards crypto regulation. Where do you see that going? And how optimistic are you feeling about the progress of that after this week?
I feel pretty optimistic. I think it's clear that crypto is here to stay, and it's clear that the majority of Americans are very interested in crypto, in owning crypto and investing in it in safe ways. And we've always argued for additional clarifications and additional regulations to make these products accessible and available, and to make the consumers feel safe. One thing that I will say is that 21 Shares is available across more than a dozen countries. The United States and our regulatory process here is quite unique in how public it is. Where every little change, every single edit is put in a public showing available to anyone who can just visit their website. That's usually not the case. And the reason I say that is that in the US, it may seem like there's something that is sudden and has changed, but really we've been working on this for a great many years in the background. And it's typically the same kind of process. It's a lot of back and forth. It's a lot of education and explanations and engagement with the regulators. It just happens in a much more public way here. And so sentiment changes seem a little bit more short term. But this is really par for the course and a great development all around in maintaining additional regulatory clarity and bringing these products out to customers as soon as we possibly can.
Okay, that's all for Crypto World this week. We'll be back again on Tuesday after the Memorial Day holiday as our coverage of one of the biggest crypto conferences in the world, Consensus 2024 in Austin, Texas, begins. We'll see you then.